Good afternoon, traders. Welcome to our weekly outlook. Let me say thank you to all of you who came because I wasn't expecting to see so many of you because of the late notification that I give. Hopefully you guys can help spread it when I'm this late because it's sometimes a problem with time that I'm not sure whether I could, do it or not. I have a very young 8-month-old son, so he demands much more of me these days. Right? So let's go. If you guys can share it, don't share it. You can share it in your Facebook and your LinkedIn. That is what I do, and traders who follow you will get the link to come, right? And let's go. Let's start. Dollar index. I'll go pretty fast, and if you save all your questions for the end, if you want to write it down and save it for the end, it's on the euro or any other trade. We'll come back to them. Save all the questions to the end, right? So I can finish the charts very fast, and we can take questions. Dollar index. We're anticipating a consolidation. That is a deeper correction in the dollar. You can see we're getting the divergence in the MACD, so we're anticipating this to break. We'll be looking for a deeper pullback and then a continuation to the upside. The upside is not over, but we will get a pullback into here before it goes. So next week we can see some weakness on the dollar. Right? We were anticipating weakness on the dollar, and then we'll go. On the euro, we're anticipating, we're in this daily consolidation that I showed you guys, and they're probably coming back to this trend line. We spoke about this move here that they could probably do this last week, and they're actually moving like that. So euro, although we know we're going to get some more downside, I think first we may see a little upside here. This may not give you a lot of good trading opportunities, but the next move to the downside should be amazing. So I think euro will go into that sideways move. There were some nice trades in euro, but I think that would be hard for you guys to get those trades. We didn't trade the euro the whole week because it was impossible to trade, right? So, but there is a small trade that you can get here if it starts to break this structure, and it could break the structure. Watch for this. If it starts to break the structure here, there's a small trade to retest the bottom. Not a big trade. I don't encourage my traders to take this trade. I just let it go because it's short-lived, and then we're going to see the deeper correction. Right? I think euro may just go pretty much sideways. Pong, on the other hand, we are anticipating a move back to the top. So I'll spend some time on those trades that I think are interesting. And Pong, I think, has a very big move to the upside. I'll go to the daily structure so you guys could see what I'm looking at. And let me just take everything out there pretty fast. What we're looking at in the Pong is we've had a very sharp impulse to the downside. So we're anticipating a correction. Remember this correction we had here? We're looking for a correction, not as big as this, but a bigger correction to the upside and then one more down move, right? So we're looking at this consolidation here. See that sideways move? The break to the upside, right? That is the trade we're looking for. And we don't know how deep it's going to go, but based on the fact that we have divergence in here, we're anticipating some more upside in it. I mean, it's an interesting trade to the upside because there are a couple hundred pips in that trade. So why is it not going? Well, because it's consolidating. And two things before I go, especially to traders who don't have any idea what wave trading is, or what Elliott wave is, or wave patterns are, or anything like that. When you see they start to form a corrective structure, right? It's not as simple as a 1, 2, 3 and it will go. It's not that simple. If you learn anything about waves, when they're in a correction, it can be very, very, very complicated. Now, that doesn't prevent you from trading. So let me show you some of the trades calls I made last week that I don't know why people are freaking out. When they made this first sharp move up, I said, okay, wait for a correction and then buy it. Well, we never got a correction. We got a pullback. If you had bought this pullback, you got a break-even trade. For us, that was a break-even trade. If you bought this pullback, you got some pips out of it because you would have come off of the trade right here, right? And then it started to go down. We saw this move here to the downside, but we didn't get to trade it because we were waiting to trade it during a news event, and it took off just before the news event. Actually, it started to fall really hard before the news event when we were waiting to sell it. We wanted an entry order and hope we were looking for a technical trade to the downside. And we were looking for them to break this low. That is because it's the way structure moves. We know that this was going to break the low because we are looking for a certain type of pattern. And if you're looking for a certain type of pattern, that pattern behaves a certain way, right? Now, I'm not going to go into details of what pattern we're looking at and why they behave that way. I have no idea why, but I can tell you how they look like. I can tell you how that pattern should look like, and what it should look like. It should break this low. Now, we're not anticipating the break of this low, but we're anticipating a pullback here. So if they break this low, that changes the pattern we're looking at, and we will relook at to see what new type of pattern we can have. Right? That's it. That's every time you get an extra piece of movement in the chart, you look to see whether it's following the pattern you're looking at, or is it changing the structure as such. Right? We're not doing voodoo, and we don't have a crystal ball. Right? We're reading into the structure that we have. And sometimes the structure is not very clear. If you're a wave trader, you will know that. Sometimes you don't have a very clear, defined structure. You have to wait until you get enough parts into that structure to say, well, okay, now I can see what they're building, right? If you're looking at a building that is building and it's halfway, I'm pretty sure you can't tell what it is until they've finished it, right? They will have to put all the stories on before you can tell it's 28 stories and not 15. Right? So it's pretty much like a building block going on here. So did we buy this one? Yes, we did. That didn't turn out good. That turned out break even. So what we are going to do now is we're waiting for a buy setup to buy. We don't have a setup. Until we have a setup, which is based on the strategy we're using, then we will take the trade. Now, we have a number of strategies. We have two or three strategies that we use for our trading room. And then we have most of our experienced trader has a number of their own strategies, which are very valid based on trading waves, right? So, but they're based on also on having a lot of experience in the market. So what we're looking for now is that this consolidation here, and it is a consolidation going sideways. You can see that literally should go back up because this first move here was an up move. Well, that was an up move. According to one trader, how do you call it an up move when it was a down candle? And the reason he cannot see it is because he's looking at the candles. What you need to do is stop looking at the candles, right? Look at what it's doing. This is the up move we're talking about. See that? That is the up move. And that is an up move, right? Don't look at that candle. Look at the movement it's making, right? So what we saw was an up move and a sideways to go back up again. Every time you get an up move and you get a sideways, you're going to go up. It's a continuation pattern. So every time they keep coming down, you're looking for an opportunity to buy, not an opportunity to sell, but an opportunity to buy. Go to the 1 hour, and we're looking for an opportunity to buy, right? We want to see an impulse to the upside. I want to see this thing move up. I want to see it make a flag, and then we will be in that trade going up. We don't have that right now, but next week there's a very good chance that next week we get this move to the upside. You can already see the reversal there, and you can see the reversal here. They're trying to go up. That means very soon orders to buy are going to come in very huge, and we will get the trade. So if we're looking for a trade, we'd be looking for a trade to the upside. I will post them as I see the trade setups coming. I'll post them on TradingView for you guys. Right? Aussie, New Zealand, it's amazing. It's just working the way we expect it to work. You can see that, right? We expect it to go up a little. We expect it to come down, and that is what they're doing, right? They went up, they're coming down, and then we were expecting this trade. So next week, if it goes the way we expected, this would be our trade next week. If they break this structure, we'll wait for them to pull back, and we'll be trading it down to the bottom. But based on the structure that we're looking for, they have to go back up. That is if they're going to make the structure we expect them to make, right? Now, if you understand structure and you know what structure is, you will know how to put your lines correctly. And if you're looking at this as a triangular pattern, like that, that is incorrect because this is not a triangular pattern. Triangular patterns are very defined. They have specific characteristics. This does not fill the characteristic of a triangular pattern. So it's not a triangular pattern. Just be careful of what you're looking at when especially when people are putting structures on, putting lines, assuming that there's a structure there. So let's see if this goes up. It went up, it came down back, that means if it does the upside, we will buy. We didn't get a sell setup. We were looking for it, but we didn't get a sell setup. We're actually looking. I'm not looking to buy from here, but I'm looking to wait for them to turn, and then when they turn, we'll buy. We're looking for a buy. Oh, this is not supposed to be here, by the way. Okay, sorry about that. We're looking for a buy on the New Zealand. Let me take this off. We're looking for a buy setup in the New Zealand. We were just looking at this in the trading room. That is why you saw that there, right? So we're looking for a buy two ways. Either they break this structure and we buy, or they come down to this trend line and we look for a buy setup, right? To the upside. What is this structure? I think we've been looking at this structure for a very, very long time, right? And I've explained this many times also. We are anticipating a move back to this top and then that big move to the downside, right? Now, we remember this chart, what for a bounce or a break? Well, they didn't break, they bounced, and that is a good thing for us because now we can look for that buy setup. So next week, we're looking for Pong upside, we're looking for Aussie upside, we're looking for New Zealand upside, and we're looking for Euro up but sideways. Not very much up as it is, up but sideways. So we wouldn't be trading Euro that much unless something happens in the Euro that gives us a very sharp move up. So far, it doesn't look, structurally, it's not looking like that. Structurally, the best moves to the upside that we can see is the New Zealand, the Aussie, and the Pound. All three of them showing us possibility for upside. Now, if that change, they will have to break these structures, and then that is okay. We'll be trading them down. But I don't see any change set up in them right now. Looking at the structures we're looking at right now, I don't see that change coming. I actually see them going up. So if all goes well next week, we'll be in some very nice trades to the upside. Swiss, on the other hand, we're looking for a sell setup. You can already see that in my chart. We're waiting for them to break this structure. Actually, we were in the Swiss sell. We took it off yesterday because we took it off a positive because it wasn't going. We thought this would break. We took this sell. If you can see it, the break of this structure. We took this sell here. And we thought this was going to go. It went up, came down back. Then we took it off because we anticipate one more up. It's coming down. It's go. Actually, it's about to happen. If it happens today, we may take the trade, but most likely it's next week. You have an impulse. You have a correction. Look for that trade down. And if it breaks this structure, there's a very, very big trade to the downside, just like there's a very big trade in all the other trades we're looking at to the upside. So this trade, we are looking for minimum to come back to about this level. Right? You can see it may go in a three-wave pattern like this, come here, pull back, and then go, but at least you'll get a very nice trade here. Right? So Swiss down. All of you know what I'm looking at in the CAD for. I think there isn't a person in trading view who doesn't know what I'm looking for in the CAD, because I think this trade, let me bring this up because this one is amazing. It got about 16,000 views and a lot of trolling on it. If I can bring this over just to show you what we're looking at. And this is the chart I posted. So I'm going to do this in details as I promised for everybody, right? Yep, with dollar weakness. So remember what we're looking for in this structure. Let's bring it back this, and then I'll bring up the structure and show you why we do what we are doing. This is the top. We saw the flag, we sold. We made a lot of money. Not only, I mean, there are a lot of traders on TradingView who are not my traders send me thank you for that trade and wanted to even give me some money for it, right? This was another amazing one. This one doesn't go that fast, but it was an amazing trade. And we're looking at a very similar structure here. What do? You repeat the process. That's trading. Trading is you look for a certain structure and you repeat the process. Win or loss, it doesn't matter. You don't have control over the outcome, right? You have control over how much you can lose in that trade, which is a very small loss for us. Right, compared to the wins you get when you get that trade, right? It is still a downside. It doesn't matter that they broke the top, right? It just changed the structure we were looking at slightly. We were looking at an impulse and a correction. It turns out that this impulse is still in the upside, right? And that happens sometimes. That happens like in this case, right? You see this case here? There was a sell setup there that, went very little. There was a sell setup that went much more. There would be a sell setup here that went. As you can see, there's probably here, if you can see it, there was one there that didn't go. What if they start to do the same thing at the top here? They pull back here, and then they go back up, and then pull back, and then go. They can do that. like they say, right? They can repeat that. But every time they do that, we will either get a small win or a break-even trade. Maybe a small loss, like in this case, but at some point, you're going to get this trade, and we will keep it. If we manage to get that trade to come, because we're looking at this structure, remember, you get an impulse, you're going to get a correction, and you're going to go. They repeat that process every single time in the chart. And we have been consolidating here for a very, very long time. I showed you guys this already. That is a long time of consolidation. We have 3 wave structures in it already. We have 1, 2, 3. And we're looking for this to turn. Either it would have turned here, it would have turned here, it would have turned here. If they come back to the low and they go back up, we will sell the top again. If we buy the upside, if we get a good seller to buy the upside, we will buy. Structurally, if we see something that we can buy, we will buy. But what the trade you don't want to miss is the sell in this, right? And every time it's at the top, and it is at the top in a 4-hour structure, and you're seeing a setup that works for you every time, sell it. That's it. It's that simple. Win or lost, you sell it. You repeat the process. So that's what we were trying to do here. We thought this was going to break, and it did break during the news event, but then it reverses. That's okay. We had it positive. We didn't put the positive, right? And then we got a loss. That's okay. Right? So we will keep doing this over and over and over. What are we waiting for now? Now that they're making higher highs, we'll have to let them break the entire structure, right? I'll even put it like this. We'll have to let them break this entire structure. They have to give us an impulse. This was our impulse to the downside. They have to give us an impulse, a correction, and we will sell again. We will repeat the process every time we see it. So let's see. This would be an amazing trade to the downside, and we will keep the trade until we come to this low. If you manage to keep this trade to this level, we will analyze the structure going down, and we'll make a decision whether that is a corrective structure or not, whether we have one more up, or whether it's breaking. Based on the type of structure we see here, we can tell whether we have more upside. Right? What if it only comes halfway and then start to go back up? Well, halfway is quite a lot. Halfway is about 124 pips for something like a 30 pips risk. So it's okay. We're okay with that. We'll just get out of the trade maybe for 100, give up 24 by the time you see the turn and you see the breakout, and then we'll be looking to see whether we get a buy to the upside. Right? So let's see how it goes. Just wanted to do this in details because a lot of people were freaking out on the chart for no reason. I don't know why they were. Like, they never seen that it's got to pull back and all of that. And by the way, I keep saying you should not follow me, especially if you're not one of my traders. You should not follow what I post, because what I'm posting in TradingView is not a trade call. It's a trade setup. And now you have to have a strategy to trade that setup, right? You must know your rules on the strategy. What's your risk with all of that? If you don't have those rules, you're very much risking your account for no reason. If you don't have a strategy, you should not be trading. It's that simple. It means you don't have the necessary knowledge and tools to trade. That is simply what it means. You need to learn more. You need to get those tools ready, and then you can trade, right? Then you can make any trade. Yen, we're looking for some pullback. We're anticipating some move down very soon. And then we think they may continue to the upside, right? But some downside. I don't think we're going to get a very, very big downside on yen. So yen trade, we're looking for short-term downside on it. Aussie. Sorry, EURUSD, my fault. EURUSD is in, we weren't trading it very much. So some of my traders took that up trade. Those who were there during it broke out in the nation session. Some of them took it. It's a very small trend going down, and I think you got to be careful watching it here because it will either break to the bigger trend or come down. We think it's going to come down. So the traders who are in, they're already moving their stops because we think this should come down back one more, right? We'll see. Right, it's going up pretty strong, so there's a good chance they may come down back one more here before they go. If they come down, that would be a nice sell opportunity for us, right? So we'll have to wait until next week to see which direction this give us the trade. It depends on what Euro will be doing and what Aussie will be doing. If Aussie goes up, this comes down. And we think Aussie is going up. So we'll be looking for a sell setup in this one. Let me go through some more trades that I think that are very, very nice. One of them is the New Zealand yen. I showed you the guys this pattern last week. And we're looking for a sell setup on this pattern here. It's this triangular looking pattern. If it is a triangle, we will get one more trade to the downside. You'll get a move to the upside, and then you'll get that big trade. So we're looking now for the trade to the downside here. Let me show you the setup in that one. We're waiting for this to break. Pretty much like the CAD. We want this to break, pull back, and then we'll be taking this trade down. Right? So if this is a triangle and it looks like it's a triangle, they're already getting some divergence and so on here. We'll probably get this trade next week. You only need a couple good trades, right? You don't need all the trades. You just need about 3 or 4 good trades for the week and you're okay. Right? This is a very good one if it happens, because it's confirming what we already see, which is a triangular pattern. And if it confirms that triangular pattern, if it breaks and confirms the pattern, that's a good one. If it breaks to the upside, that negates the pattern. We'd be looking for this to continue to the upside. Right? New Zealand CAD broken the structure. We will take a look at that if you want. Let's go to New Zealand CAD. I'll look at gold. Let me look at gold and silver first for everybody. Silver, I think last week I already explained that during the practice sessions some of my traders were doing, we looked at this and we were anticipating one more downside. I think there's bigger downside, but we will take it one trade at a time. So there's a trade set up to the downside here. The upside is limited. You can, if you're in any buys, you have to be careful. Right? They're going very, very slow. And when they start to go slow like that, you have to be careful, right? The upside is limited. They will keep going. They will keep pushing for a while. I don't think it's going to break now. I think they may push like this. So if you're taking very short-term trades, you may get small trades, but eventually this will break to the downside, especially if they keep doing what they're doing there, right? Which is consolidating. If they keep consolidating in that range, right, we'll be looking for a sell setup. And the same with gold. See, gold is in this range consolidating here. If it keeps doing this, eventually we'll be looking for a downside, right? I think there's a little more upside in it. I'm just telling my traders probably some more upside, pull back, some more upside, pull back, and then we'll probably get that trade down, right? I think you can see a structure like this always. Let me see if I can show you one. We'll have to find a downtrend, and you'll see very similar structures where they just pull back like that, and you can, there is a similar one. They just pull back like that, slowly, and then they drop, right? You can find one here, pull back slowly, and then they drop. Here's another one. They pull back slowly and they drop. So what we're looking for is a similar structure here. A slow pullback and then drop it, right? No, we haven't shorted it yet. Some of our traders shorted already, but we're waiting for it now. If they're short, they're in the trade. So this, you have a short, you can buy here. Here's a buy setup. See this? Here's a buy setup right now in play. Wait for it to break out, and you have a buy setup in play there. Short term, very short term, we don't know how far that is going to go, so you've got to, it's not long lived, right? So let's see what this does. Come back, US oil. Remember when this was breaking out, everybody was saying, well, it's going up, and we keep saying, nope, not as yet. Too early. We're looking for a daily 3-wave pattern. We're looking for 1, 2, probably 3 down here. But we're looking at this pattern, and there's a probability that it could do that and then come down. Right? We'll still get this downside before they go back up. This would be your consolidation, and then they'll be going up. That would be your corrective structure. So within this one, some of my traders are already in the sell on this. They're looking to come here, and then we'll see whether they break through or they go back up. That is one more trade to the upside, right? They break through, come here, and go back to the upside. That's a possibility, right? Short term to this level, when they get here next week, we'll see if they get there by next week. Guys, you don't want to discuss those trades in here. Good. And some of my traders are trading the UK oil, which is a very similar structure, right? Same setup. Come here, either go back up or break through, and then after they complete the 1, 2, 3 pattern, you're going to expect the big move to the upside. Now they'll have to complete this 1, 2, 3 pattern first. We don't know what it's going to look like. We'll see, right? And then we'll look for upside. Natural gas, it's in a big sideways move here now. We broke the trend. And I don't think they're going to go down. I think they will consolidate in here, right? We're looking for big long-term consolidation here and then go up. Something like you can go back and look at some of these big sideways consolidation like this here. See that one or this one here? Or they had a bigger one here. This may be a better example of what we're looking for. A big sideways move like this and then probably downside, right? So you can see they had a sharp move down. They made 1, 2, 3. We have a sharp move up. We make 1, we can make 2, we can make 3, and then we'll go. So for now, I think you'll be just going sideways. You wouldn't be seeing any big trade to the upside or the downside. It mostly will be sideways trade, right? Let's look at the copper. Is an interesting one. It's in a triangle. Remember we had a bigger triangle here if you guys were looking. This is a little about wave theory, so you can pay attention. This is a giveaway for you, wave theory. When you're looking at something like this, never take for granted that you're in a triangle. That's a rule. Never take for granted it's a triangle, because this could be your first wave to the upside. And if that is the first impulse to the upside, a triangle could be this. That is just a rule you have to remember if you understand anything about triangular pattern, right? This could be 1, 2, 3, 4, 5, and then it breaks to this level. So this would be the trade you'll be looking for. Now, they could still come down. If this is the triangle, they will still have to break here for this trade. So now it has to break out, and whichever side it breaks out to is a trade for you. That is why when you look at triangles, they say triangles could break both ways. So we would look for this to either give us a trade to the upside next week, and I think it's about to tell us that, or give us a trade to the downside next week. Both of those trades will be amazing trades, right? It doesn't matter which side it goes. This side would be trending. This side would be corrective, because we're in a big daily corrective structure here. Let me just show you this. See this? Oh, don't do that. You made an impulse, you make a correction, you make an impulse, you make a correction, make an impulse. We could see a correction back to the top there, and then we'll get another impulse down. So, or this is the one that is coming down. If you ask me, I'm more inclined to think we will go to the top here, and then we will see this trade down. So watch for this trade next week. Very likely it could happen. If it breaks the downside, you have a nice trade to the downside. Both ways are possible. We can do just about a number of charts. We can do about 3 more charts, and then we will. Then I'll take the questions if you have questions. All right. Let's go back to some of the very main charts you want to trade, which is the Euro Yen, Pound Yen. Let's look at some of the Pound share trades. We have some amazing Pound trades coming up. This is a nice one. I think this is a really good one you want, right? I've been posting this for a while. We've got about 2 or 3 trades in this one that was 2 were break even. One of them was a small loss. The very first one I took was a small loss. That is this one. I took it a little early. I took the loss in that one. And then we got this one. That one was a break even. Then I got a second one here was a break even. Both of them, they didn't go because I wasn't taking the small profit in here. They were in profit, but I just wanted, this is one you want to get. I just posted this today and I said, watch it. It's going to make a down move and then it's going to make an up move. I think you guys all saw this, right? Looking for this flat in here, and they've actually made that flat, right? We're looking for the down move. They already made the down move and they've already turned to the upside. See, they've made the down move here fast and now they're turning to the upside. So a breakout, you can take these out now. A breakout is a good trade to the upside. We can put this one like that. And this is we are in that consolidation. Take this out. And once they break the consolidation, you're ready for your trade to the upside. The bigger trade is this one. The bigger consolidation is this. Let me take this out. You don't need these anymore. Very similar to the pong trade, right? You got an impulse up, you got a deep pullback, and you're looking for this trade to come here now. So this is the trade you'll be looking for next week, right? That's a very, very nice trade. Euro Pong and Aussie New Zealand. Aussie New Zealand is also a very, very interesting trade. Let me bring it down. Aussie New Zealand, remember all of us, we were tracking this up move, and I said, watch it, they will consolidate. So we're still within this big structure, and the next big trade, this was a nice trade up, everybody remember that? The next big trade is this one, right? So this stop, and then they will either break or they will come back again, right? They can always come back. There's always that chance for a 5-wave structure. I don't think they will come back. I think they will break through. So this second trade you don't want to miss. If you miss the first part of it, don't miss this part, because this may go straight through. You can take it 2 ways. Wait for the break of the structure, and you should wait for the break of the structure to the upside. It's a very big trade, right? Wait for the break of the structure, and this would be your trade next week. Or you can wait for this to give you a buy setup here, which I don't see. I don't see a buy setup in that as yet. But if it gives you a buy setup, you can trade it to the top. Don't try to buy the bottom. You never know where the bottom is, right? Don't try to buy it here or buy it anywhere here, because this is not over. We don't know when it's over. And don't make assumption that you know when it's over. It's over when it breaks out of this structure. That is when we're ready to take it. One more wave in the lower direction with Pongos. That is only, good question, by the way. One more wave to the lower, but that will, what I'm looking for this to give us at least one more move up. So if it gives us one more move up and then starts to come down, as you probably said, we will still have a good trade here, right? We can't lose on that trade, right? So if they break and they go up, we'll at least get one more impulse up, and then we'll see whether that is the upside or whether they come down back, which means they will have to do something like this and then probably come down if they're going to come down. Make sense? Hope that helps you. I don't think that is what's going to happen. I think we're going. I think this one is going there, so I'll take that off. Let's see. We will take the trade. I will take the trade, definitely. And then we'll see what happens to it. Because that is a very, very good trade to the upside. Okay, I think somebody wants Nifty. Let me just show that very fast, and then we'll take questions. Let's go. Nifty, we're looking for some upside when they break out of this structure, right? They're going sideways. You got to be careful. I still think there's more sideways here. You may want to wait some more, wait for the upside, and based on your strategy, take the trade to the upside. It's upside. It's just waiting. S&P 500. Let me just do this for those of you who are looking. We're looking for this structure to complete. Let me just show you 1, 2, 3, 4, 5, and then go up. Right? That would complete a bigger 3-wave structure. When they complete that, they will complete this structure. 1, 2, 3, and then up. Like this one. 1, 2, 3, and then up. Right? So this, they will break this low, that's for sure. So this will come down some more. I think there's more downside in this short term. Short term, you see this structure will probably come down here. And then we'll get the upside. So you can trade it down if you want, and then wait for the upside as well. EuroCAD, very interesting one. Let's go look at the EuroCAD. Pretty similar to the CAD dollar we're showing. This is going up, but so far, this entire structure here is looking corrective. Right? So if this goes up some more, I'm not looking for a buy setup, because I think we'll get a sell setup if they break this structure. I'm looking for them to break here, make a flag, and then we'll sell. So if they break and sell, we're not interested in the upside in that. The upside is short-lived. So we're looking for downside in it. Euro USD, we just did that. Euro USD will do nothing. We just did that one. It will do nothing. That's what we start with. It's going to go sideways but up. Most likely sideways but up. This small trade only if they don't break that top. If they break this low here, then you get a small trade. It's very, very short-lived. It will come here and go back up pretty fast. We're looking, this may look like a sideways pattern. So this one may not even come that much. It could come this much. See that? And then go back up. So the sell opportunity is not a great one. Look for mostly upside. UJ, we did that already. You can watch the webinar. We just did UJ actually. One more chart that I want to show you guys that we haven't done is the Euro Pong, because we were trading that also. Let's look at the Euro Pong 4 hour. So we were in the sell in the Euro Pong. Let me just show you guys this. I was in the sell from here. I think I told you guys that I was in the sell from here. And it came down, went back, came down. I wasn't worried. It went back to this, and I wasn't worried about it. I took the trade off somewhere here. When I realized that this pattern, 1, 2, 3, this pattern is making a move for the upside. Once I realized we got that pattern in play for one more move to the upside, that's when I took off my trade, right? There are a lot of people going crazy about it. I don't know why. People, they have no plan when they're trading, and then they start. So we're looking at this as a possible 1, 2, 3. I think I posted that chart. And then we're looking for possible more downside. We're looking for this structure here. 1, 2, 3. 1, 2, 3, and then more downside. If you look at the updates that I posted, you would see it. I think this was the sell setup that I posted. And let me just show you. Got that sell setup. Let's go. You never really got a solid breakout, but even if you take the trade, even if you take that trade and you kept it, because some traders took it, they took this trade here, and then they asked me what happened. I said, this may go up some more, but it's going to come back down, right? So you can keep the trade to get out for break even. Let me go back to the trade. I want to show you step by step how we manage trades when you're in the wrong side of the trades, right? You decide for yourself. First, you must have a stop, and then you decide for yourself where you think that trade will no longer be valid. So when I was asked, I said, okay, if this breaks to the upside, and we can see that, it will come up here, but they will still go back down. So let's look at the structure, because there was no structural change. Comes back here, look for the downside. And those who were in the trade managed to get out for break even if they waited for this to come back here, exactly to where you got in. So the worst could happen is you get a break even trade. Some people even sold it from the top, so you make some profit. You made some profit there, right? If you know the trade and you don't panic. If you waited long enough, you get more than the break even, right? And then you get, and then I posted this. Watch this structure to go up, because we can see the structure, that this structure is telling us upside. Right? So you were warned that now the structure has changed a little, and we got the upside. And I think it's very clear what we had, right? That we can see it clearly here. We got the upside. Now I think we'll be looking for downside. We don't have a sell setup yet. We're waiting to see what happens here, and then we will decide whether we want. I did not take the buy on that one, because I didn't think it had very big move to the upside. So the risk to reward was no good for me. Here's the thing. I have 20 minutes more. I can either spend the 20 minutes taking questions from you, or in 20 minutes I can explain to you guys what you need to focus on if you want to be a good trader. So if you want me to do the second part of it, just give me a yes. Things you need to focus on, right? Or you can put a 2 for that, right? Yes. So let me go through that very fast for you guys. What you need to focus on if you really want to be successful in trading. It has nothing to do with sales pitch and anything. So let's go. Because I think a lot of traders don't really get it. They jump in. Here, number one, let me type some things here. 1/ Don't follow anybody's signals. Don't follow anybody's signals. I mean signals. That is a buy, a sell, an entry, a stop. Do not follow it. You will never become a good trader if you follow anybody's signal. So don't do that. Don't follow signals. If you ever want to be a good trader, stop following anybody's signal. What you can learn from anybody's is their view. You can follow anybody's view you want on what they think the trade is going to do. Right? You can follow anybody's view. You can follow my view. You can follow any other trader. What are their views of what this chart should do? Where is it going? Not the trade signal, buy, sell, because trade signal, even if you don't know the trade and you take the trade signal, you cannot manage that trade. I just show you in the Euro Pound. You cannot manage that trade. You'll panic. You will do the wrong things. You will end up with the losses in places where good traders who know how to trade got out with some profit or break even. And even if you take a loss and you know to trade, it's not going to be a problem. So what else you need to do? First, when you stop following everybody, don't pay anybody any monthly subscription fee. If anybody is charging you monthly subscription fee, unsubscribe tomorrow or do it right now. There should be no subscription fee, because that means you're actually giving the person his monthly salary. He cares less about you. Our trading group does not have a monthly subscription fee. I don't charge you to be in the group. The only thing I charge is for teaching you. That's a different story. If you want anybody to coach you, to teach you, to train you, I think you have to pay them for their time. That is what I charge you for, my time. Not even the knowledge. I'm giving that for free. My time. The time that it takes to coach you, to understand that knowledge, and to train you to use it. That's what you pay me for, basically. After that, you're in our group forever, for a lifetime free. For the rest of your life, you're in there free. You don't have to pay any monthly subscription. So if you're paying it, stop doing that right now. And you can check anybody who charge monthly subscription fee. That's what they do. They make their money off of your monthly subscription fee. Every month they have a salary. And actually, one of them told me to do that. He said, well, you're so crazy. You're doing the wrong thing. You don't have a good business strategy. You need to charge these guys for the webinar separate. You need to charge them for the trading room separate. You need to charge them for this separate. If you charge all of them for that separate, $20 here, $50 there, $100 there, you get 1,000 subscription to you. You make a lot of money. I was like, that's not my point. That's not what I'm here for. If I was here for that, I'll have a monthly subscription, and I promise you I'll have 1,000 people in that room. That's not the point. None of those 1,000 people will ever learn to trade. They will never become good traders. And we have some amazing traders in our trading room. I can promise you that. Some of them are better traders than I am. And I mean in terms of trading, their trading psychology, their way of managing trades, the way they take trades. They're better traders than I am. They may not be able to coach you that good, but they're better traders than I am. That is what I want. That's what makes my day happy. When I wake up to people sending me message from TradingView, thank you for that trade, right? I learned something from you today. That is what is important. Next thing you need to learn, money management. Make this your number one goal. You will never lose your account if you have good money management. I don't care how bad a trader you are. I don't care if you know nothing about trading. If you use good money management, you will never lose your account. You will lose a lot of money. Your account will go down every day, but you will not lose it if you use good money management. I actually did a webinar on money management. If you guys go through my thing, you will see it. If not, I'll probably redo it one day for you guys. Maybe next week we do money management, right? I can give you very nice money management, how not to lose your account. The third thing you need to do, and you definitely need to do that, is knowledge. Right? Knowledge. You need knowledge. If you want to become a good trader, you need knowledge. Right? Not risk management. That's something else. Money management. Money management is how much money you're actually risking on every trade. Risk management, we'll do that. We do what is risk to reward, what is risk management, what is money management. Those are different, absolutely different things. Money management, how you manage your money. That is important. How much money you're going to spend on every trade, put it that way. That's money management. Risk management is what are the risk factors of that trade, how much you're risking and how much you're going to win. What's the reward to that trade? That's your risk management. Do you take every trade that has your setup or not? That's risk management. So if you have a trade that gives you a risk to reward of 5 to 10, 5 to 1, you take it. What if the trade is a 1 to 1? Do you take it? Right? That's where you're managing the risk. What is the risk and what is the reward to that trade? Right? That is the whole point. So when you learn to do that, you need to have knowledge to understand. Here's the thing. We're going to go backwards. For you to understand good risk management, you need to be reading the charts correctly. Not pin bars, not candlesticks. You need to be reading the structure correctly. If you can do that with a high percentage of accuracy, let's say you're 70% accurate when you read the charts. And if you go through all my charts, I think you can see 70% accuracy. So let's say you get 70% just in reading the charts, not taking trades. That's reading the charts. And let's say you're going to take 50% of all the trades you see because they have very good risk to rewards. Right? You don't have to take all of them. You take 50% of them because these 50% have the amazing risk to reward that you're looking for. And if 30% of those that you take from this 50% go, that would be about 80% of all that you're taking, right? 30 or 50 would be about 60, let's say 60. Let's say you take more, about 40. So you will take 80%. Let me just erase that. You will take 80% of all your trades are going to be positive. Because you remember, you reduced your trades. You actually got rid of those that were 1-to-1 risk to reward that you don't want. You took the ones that had 3-to-1, 4-to-1, 5-to-1, maybe 2-to-1. You took those trades. And you still lose 20% of those trades, but you win 80% of them. And you're winning 3-to-1. And you're losing 1-to-1. You see the difference, right? You start to understand. But for you to be able to do all these things, you have to first learn to read the chart. You must have the knowledge that's needed for it. Because without the knowledge, you're like a I don't know, like a blind man in the forest. You have no idea which direction to go. You have no idea where you are located. You may be next to the road. If you're in a forest and you don't know how to move around in forest, you may be walking parallel to the road for 40 kilometers, trying to find where the road is. Because you're in the forest and you have no idea how to get out of there. But if you know how to move around in forest and you've learned your way, you'll find the road pretty fast, right? Stop loss are not based on 50 pips and 100 pips. Good question, by the way. Stop loss then based on what is your trade setup. Let me give you a very concrete example. Let's go back to the CAD dollar. That's a very concrete example of what we do in our room. Now, here's the question to all of you. Do I think this thing is going to break? Absolutely. I have a 99.9% feeling, or not even feeling. I have a educated guess, put it that way, that this is going to break. I don't know it's going to break, but I have a feeling. But in terms of trading, when we took the trade, you know where we put our stop? On top of here. And you know why we put our stop there? Because according to the strategy we're using, if it breaks that top, it breaks the structure we're looking at. That trade we are trading is no longer valid. That is where you put your stop. You put your stop where you think that trade you're taking, based on the rules you're taking it, based on the structure you're looking at, will no longer be valid. If it is going to be valid, you keep the trade. Now, we're still looking to sell this, and we will sell it, and we will put the stop where we think, if it goes above this area, that is where we will be wrong, and that is where we need to get out. And it's all based on structure. What structure we are trading at the present moment. Now, we still know this is going to go down. We still feel it's going to go down. We still have very, very strong belief it's going to go down. And it will likely go down. But we allow that trade to be taken out. We did not move the stop because that is rule-based. You don't change your rules as you go along unless you're fine-tuning your rules to fit your strategy. Our strategy is well-tested. It's proven to work very good, so we don't mess with it. We take the loss. And you know what? You can take losses. If you can't take losses, you better stop trading. Right? You should be able to take a loss with a smile in your face, because no one trade should have. You remember the second thing what I told you need to do? Good money management. If you do this, no one trade will ever affect your psychology as a trader. You know, everybody talked about psychology as a trader, and they have people who are trained to deal with you if you have problems. It's all a lot of, nonsense. The only thing you can do to manage your emotions, you can't get rid of your emotions because you'll be dead. But there are things you can do to manage your emotions. And one of them is having good money management. Because if you have that, that will help you manage your emotions. When we took the loss, none of us cried. We slept very well. We had the trade in for 2 days, and we slept very well for those 2 days. Also knowing that it is a possibility we're going to lose the trade, it didn't bother us, and it will never bother us. I will have 6 trades on and I will go to sleep well. Even if I lose all 6 of those trades, I will not be worried. Exactly. I will not be worried about that because the next 6 trades are going to be winning trades. Remember the numbers of things I teach you. Remember, 1, risk to reward. You take the ones that have the best risk to reward. So when you win big. When you lose small. Money management, you manage your money in such a way that you'll never ever be worried about any 1, 2, 3, 4, 5 trades. Win or lost, you don't care. That's it. You're running a business. You're not chasing candles and looking for animals in the chart. You're running a business here, right? And that is, you have a problem. You're booking lost faster. That is because you have no idea what the structure is doing, and that is your problem. You're just clicking trades and clicking them in and clicking them out. You're emotionally trading. You're emotionally following the candles. You get one red candle up, you panic and you close the trade. You get one green candle down, you feel happy and you click a trade, right? And that's not how we trade. We are looking for very defined structures when we trade. If we see the defined structures, we trade them. If we don't see that defined structures, and if it doesn't fit our strategy, we don't trade it. That is what you guys need to do if you want to be good traders. Those are the things we teach you. That is why it's a training session. We train you to follow those rules. We train you to do those things. We train you to repeat that day in, day out. You can never learn by having a 3-day course somewhere or by buying a set of videos from somebody. You will never learn anything about trading by buying 6 courses or by paying somebody 3 months salary to teach you. That will not work. It takes a longer time, and that is why we have lifetime access for free, so you can take your own time and learn until you learn to do it properly. That is the point of it. That is what we are doing. We are training you and we're helping you and we're guiding you, and we have tons of what rooms that you paid for happens when somebody learns to trade. If they're good, they leave the room, and all the people in the room are people who cannot trade. Our room is the opposite. The guys who can trade good, they stay there because they're not paying a subscription fee. They don't need to take money out of their pocket to pay. If they were paying a subscription fee, they would be gone. I want them to stay and help the guys who are still having problems. And that is what we tell them to do. We said, stick around and help a friend, help somebody else. You're winning, stick around and help somebody. And that is what they all do. Because it's an amazing place to be. They stick around and they help somebody else. Right? That is what you need to do. If I was charging them for that, they'll be gone. In the blink of an eye, they'll be gone. You don't want to pay a monthly fee if you're a winning trader and you're already making money. Why would you pay anybody to be there? Right? Office location is my house. You want my house address, Raj? Guys, I'm not doing this as a business. I'm not training people my business is a trader. I'm trade, right? And I trade from home like everybody else who trade from home. All of you trade from home. Anybody who tell you they have a fancy office somewhere in Manhattan is probably, messing with you. Remember, one guy came in a chart and he said, I don't know what you're talking about. I supply signals to hedge funds and banks. I was like, yeah, you're probably crazy. That's why you're here in TradingView with all of us, right? You're supplying signals to TradingView and the banks. Those banks are already either bankrupt already or something like that. People hype this nonsense that they were working for a hedge fund or they're supplying signals to hedge fund and all of that. I couldn't hear anything more crazier than that. I told him, I said, well, yeah, thank you. That is why you're here in TradingView. No trader in TradingView has reached that level of hedge fund or bank or other. We're all just day traders. Don't let anybody kid you with that nonsense. They're all just day traders like you and like I. We may all dream to be there. We all wish to get there. I do have a plan to get there one day. It takes time. Nobody's going to take you in a hedge fund in like that or take you in a bank like that so easy, right? Especially as a technical trader. It doesn't work that easy. I had an offer to work with a bank, but what they wanted me to do was sit there and click trades based on their strategy. And I said, no, thank you. A bank right in Russia. A guy called me, a Russian guy called me. He's a trader. He was working there. That was his job. He would go there, and there were 4 of them, and they would work around the clock, and they would buy, and they would mostly they were buying. They were accumulating Apple trades and a few more other. They were like accumulating, but their job wasn't, and they weren't analysis, or they weren't doing any analysis or so. They were just manually clicking trades. Right? They were like, just clicking trades based on when they were told to do it, or based on this. If it does this, you click. If it does that, you click. I'm like, that's not for me. That's not what I want to be, right? Right? There are a lot of traders like that. People could come and say, oh, well, I work with a bank. Yeah, you probably worked with a bank, but that was all what you were doing. You were clicking trades. You weren't actually doing, the analysis itself, right? So it's that. Don't let people put hype into you, right? It doesn't work. You guys have to learn. And I think you can all do it, right? I missed a lot of the messages, but I think you all got what I'm saying, right? If you want to be successful traders, do that. Learn. Knowledge is the number one thing, guys. Knowledge, money management, risk management. If you can do all of that, you're good. I'm not doing this for people to like me. That's Hiren, if I call your name correct. I hope I didn't misspell it. You know who are the people who don't like me, who come and troll my charts? People who are selling signals. They're actually real people. They're not. They create accounts outside, and then they come and troll me. When you will see how many trolls come on my charts tomorrow. Even on YouTube, they're trolling for this very same reason, because I'm telling people not to buy their signals. So tomorrow, you guys go on my YouTube video, or you go on my Facebook page, or you go there, you'll see a lot of trolls start coming in. Like, don't worry with this guy, he's telling you BS and all of that. Well, the main reason, because their business is going down, right? When I said don't buy signals, and you stop buying the signals and you learn to trade, what happened to their business, right? I know a lot of people who keep buying the signals, although they're losing. They keep still buying signals, and they keep losing, but they keep buying. Because you know why? The signal service is showing as if they're winning. The signal service seems to be making profit, except you are not making the profit. Actually, what we did to get that's a good question. Somebody asked how much. We have never really kept an account of our trades that we are taking, how much are winning and losing, and each of our trader wins or lose based mostly on their experience, to be honest. The more experienced ones are very winning traders. I can tell you, I know a lot of them, and they send me snapshots of the thing. The new traders are having difficulties because they don't click the trades. So what we did last week, and this is only 1 week. 2 weeks is open, but we are trading it 1 week, because 1 week we are transferring it from one place to another, from one platform to another. We opened a live account in our trading room. And that account will be traded by the traders themselves, not by me. So every time there's a trade that fits our strategy, and we decide we're going to only stick to the strategy, we were looking at good trades as well, right? Sometimes we will take trades, traders will take trades that will not be reflected in that account, because it's not based on the 2 strategies we use in the trading room. We were having a big argument about that today, by the way. Should we take all the good trades we see, or should we take the ones only based on the strategy? So we will take the ones only based on the strategy, which means the traders themselves, we have about 10 traders who will be trading that account. They will click the trades when they see it based on the strategy. And sometime next year, we can give you, maybe early next year, we can give you the results. How many of those trades are winning and how are losing? You will have a good view of it. So far, I think we took about 6 trades. I think so, and we're 2% up. We started with 0.5% per trade. So we won. No, we took more than that, because we won 6 trades. That was 3%. We were 3% up, and we lost 1 today. We took 1 with 1% that we lost. That was the CAD that we lost for 1%, the CAD trade. So basically, we'll see. I don't know. I don't know the results. I can't tell you. I'll be lying to you if I tell you. Mine is good. A lot of traders are having good results, but they're not all taking strictly by the strategy we teach. They're taking with their experience as well. It's an online course, guys. So, okay, everybody, have a wonderful weekend, all of you. And I would see you Monday, right? Don't forget to check out my, all of you are guests. I guess all of you are in TradingView, so you can check it out there. And if you like what I do, click the likes so that others could see the charts. You can share the link for this webinar, because afterwards I get a lot of people calling me and said, well, I didn't get your link for the webinar. Where can I get it and all of that? Yes, I'll put it on YouTube. Thank you all for coming. And you can actually share the YouTube videos, right? You can share them anywhere. If you're in a group of traders who are interested, you can share it. It's free. So I'll see all of you. Have a wonderful weekend. Thank you for coming again. Bye-bye.